Good evening, you're watching The Big Question. I'm Sanjana. It's India's most talked about real estate gold mine, but is it also a house of cards? The glittering towers of Gurugram promise aspiration, but is the foundation beginning to crack? In a very viral post, real estate columnist Vishal Bhargava warns of a potential house of cards, saying the city's real estate boom is being propped up by investor greed and not buyer need. Now, over the last 2 years, Gurugram has become the poster child of India's luxury housing boom. 5 crore price tags, launch day sellouts, and a staggering 84% surge in property prices in the last 5 years. This is a market that looks like it can do no wrong. According to Anurag, Gurugram accounted for 52% of properties sold in Delhi NCR in 2024, with luxury and upper mid-segment units driving most of the demand. But under that surface, cracks are starting to appear. From tech professionals saying they've been priced out of their own city, to pre-launch sales being snapped up by investor groups even before construction begins, the question now is this demand organic? Is it manufactured? Are end users actually buying, or is speculative capital inflating a bubble? Tonight on The Big Question, we decide the reality and we decode it behind this Gurugram boom. Is this growth sustainable, or are we heading towards a correction? Joining us for this very, very interesting discussion are Vishal Bhargava, real estate columnist and the founder of BHK Voice, whose recent video questioning Gurgaon's affordability narrative has gone viral. We also have Sudeep Bhatt, director at Whiteland Corporation, one of the most prominent developers building across Gurugram's new luxury corridors. I have Santosh Kumar, group vice chairman at Anurag Property Consultants, bringing deep insight and data on how India's housing cycles behave in markets like this, and Navdeep Khanuja, founder, Urban Turban Realtors, one of the most well-known property dealers in the NCR luxury space. Thanks so much for joining us this evening, gentlemen, and welcome to NDTV Profit. Vishal, I'm going to come to you first. You've said Gurugram is heading towards a house of cards, propped up by investor greed. What is the evidence that you're seeing?
So I think House of Cards is actually the most appropriate terminology for Gurgaon's real estate market. It's a market, I think, that's been built to a large extent on style than substance. So I, in fact, think that Gurgaon and the Pune market are in a way, inversely placed. Pune has more substance but very less style. Gurgaon has too much style but too little substance. I think the part of the problem with Gurgaon is that their focus customer is not an end user or an investor. Their search for that buyer is to be a trader. And by trader, it typically, like in the equity market, it means hot money. The hot money can come in quickly, but it can go out even quicker. So the big risk for these sort of stakeholders when they get in is that the market slumps even to a marginal extent. Things start to get tough. And if it declines meaningfully, then there's outright panic, which is the reason even in the past cycle that we saw, most geographies in India, they saw time correction. NCR market was the only one that saw time correction and price correction. Prices actually fell there. While in markets like Mumbai, Bangalore, they in a way stagnated, fell down to a limited extent. So I think that's the setting we're again seeing in NCR and Gurgaon. A lot of exuberance backed up by fundamentals which are probably 1/4 of what they should be.
Santosh, we're seeing Anurag data showing that Gurugram had the highest quarterly price growth among all NCR markets in 2024. The Anurag's own report showed a 28 to 30% year-on-year price increase in NCR's premium segments. Is this sustainable, or do you think that we are in overheated territory?
If you look at Gurugram, Gurugram has undoubtedly seen a surge in activities in the ultra luxury properties, with both demand and supply seeing a significant jump over the last few years. Post the pandemic, we had seen very high demand for luxury homes, and developers who have been previously deferred their launch projects in the ultra luxury segment now coming in and launching it. And the demand in Gurgaon prior to the pandemic was largely tilted towards affordable housing and mid segments, which really prompted the developer to launch more projects in the budgeted category. However, due to the high demand, new supply in the ultra luxury category by large and listed developers has increased substantially. If you look at many of the new developers are coming into Gurgaon primarily because they see there has been attractiveness, there has been economic development, there has been a lot of infrastructure development which has been taking place, because of which you would have seen from a office absorption side of it, the Gurgaon market seeing around 8 to 9 million square feet of office absorption which is taking place, which is a very good sign, since majority of the people or the working force is migrating towards the Gurgaon, which really infusing a lot of economic activities in the Gurgaon, because of which the income of the people are also increasing, which make them to afford these kind of ultra luxury or luxury properties with developer. Looking at your the price appreciation, if you look at it, what we had seen in the last 10, 12 years, post 2011, there was actually not any significant price increase in these market till the pandemic is over. But post the pandemic, yes, looking at the opportunities and the demand and supply parameters, the prices of Gurgaon has really increased, and it has increased substantially. What we are seeing over a period of time is that, yes, in the recent past, it has increased, but in the next few years, you will see some sort of a corrections, but there will be a inflation related growth still on the prices you will see going forward as well.
Okay, all right. So, several projects are also claiming 70% plus pre-launch bookings with very limited clarity on end user versus an investor mix. So, Deep, you represent a developer in this boom. Are projects being launched in response to real housing need or to speculative booking trends?
So my take on this is it is a mix of both.
Okay.
But typically when a developer launches, so I will first give you a generic answer and then I'll go specific into how we look at our product launch. So typically when a product is being launched, yes, certain amount of market study and absorption capacities are evaluated, and if you do not do that, the chances of you being absolutely off track are very, very high. In our kind of business, the stakes are, really high. So it is important that you should get it right first time. But to answer your question, initially, if you're looking at a high amount of sales happening on a certain day of launch or within a short period of your launch, chances of you not being right with respect to your TG and the quality of sales, both could suffer. Now, how we look at our launches at Whiteland is we believe that the quality of sales is very, very important, and rather than looking at doing volume sales at one go, we believe that the quality of sale will determine that the buyers stay put and continue to fund the project. As one of the panelists rightly said, that if you are not careful about the kind of people who are coming in, so you're bringing in hot money, which is easier to come, but even faster to go. So to answer your question, there isn't a mechanism to kind of sort between end users and investors or speculative buyers. But then typically across all markets, when the markets are on upswing, there are whole lot of people who would want to kind of do a short-term trade and look at enjoying that appreciation advantage on the investments being done.
Okay. Resale activity in luxury launches has also spiked, with some buyers exiting within 3 to 6 months at a 20 to 30% markup. This is something that Vishal has also addressed in his video. Navdeep, you deal with high net worth buyers daily. Is this demand real, or is it a paper-driven speculation and lots of investor flipping?
Honestly, if you ask me, the high-end buyer base is definitely strong. But what's interesting is how it's widening. Early luxury was limited to industrialists or legacy wealth, inherited wealth. Now we have entrepreneurs, CXOs, even influencer picking up luxury homes, not just for status, but for comfort, privacy, and better living. So yes, the demand is quite real and it's here to stay.
Okay, all right. So Vishal, then let me come to you, Vishal, because in this very viral video, you also spoke about how this actually takes place and you've explained the whole process behind it. So I'd like you to elaborate that for our viewers right now when it comes to the house of cards and why Gurugram now is being touted as that.
Okay. Okay, just to simplify it for you, okay. Uh, the first big difference between a market like Mumbai and Gurgaon is that in Mumbai, if you do a booking, the moment you do 10% payment, you go and register your document. You register at the time of booking and pay 10% to the builder. You immediately register, you pay your stamp duty, deal done. In Gurgaon, you start paying your stamp duty not at the time of booking, but at the time of possession. So I can book without paying any government levy, a meaningful government levy of 5% in the form of stamp duty in Gurgaon. Secondly, in markets like Mumbai and Bangalore, you have typically end users and investors. Gurgaon, in a way, has this third character that is there in other markets, but in tier one markets, which I consider Gurgaon today as, it's the market that has this segment which caters to a trader. Now, the trader's role is very simple. His role is that I have to create a bubble. And for creating a bubble, I have to make the environment conducive. That's the nature of the ecosystem. Now, how do I do that? A trader is told that this is a 5 crore property. Uh, if you are a buyer and you have 5 crores in your account, you'll buy one property. But imagine if I am a guy with 5 crore, but I'm a trader. The environment is set for me in such a way wherein I don't buy one property, I book 5 properties because the builder tells me that you know what, you don't need to think about putting 5 crores for the entire property. There's a down payment amount of 20%, which is 1 crore. That 5 crores, use it for buying 5 properties by doing a down payment of 1 crore each, with the anticipation that 3 months later, 6 months later, you can flip it out. By flip it out, I mean you can sell it almost like how in equity markets you have an intraday trader. Here you buy it on Friday, you sell it maybe 3 Fridays later. How does that happen? That is the key role of a trader. The trader is there to create hype because you will buy one apartment, I'll buy 5. And because of me buying 5, I make that first day launch very successful. That creates a hype. All these headlines that we see in the papers, 5,000 crore worth of apartments sold out on day one, 10,000 crore, 8,000 crore sold out on day one. It's obviously most of it is fake, or rather, an overwhelming majority of it is fake. Uh, but that's what the trader's role is, because the moment he creates that hype, the next person thinks this project has so much demand, and that property's value rises from 5 crores, it can become 6 crores, and that trader who put 1 crore to take a bet of a 5 crore property exits with a return of 1 crore on a 1 crore investment. So it's a ROI of 100%. That's the role of a trader in Gurgaon.
Okay, understood. Santosh, would you agree with that? Because is this price growth end user led or investor driven? And what percent, if I were to ask you, of these premium launches are actually being occupied?
See, primarily, Gurgaon has been, it was a mix of end user and investor driven market.
Correct. Yes.
Traditionally, it has been like that. And what we have seen immediately post the pandemic, when the developer launched many projects, it was kind of a, maybe 60-40 tilted towards the investor. But over a period of time, when the regulators started playing their role as a watchdog, the trend has really changed and it has become an end user market. Yes, many of the projects, if you look at it, these are all listed players, and when they declare their results, it was the regulators are watching, and I am quite sure that every regulators are monitoring many of the developers' books minutely. And I doubt, that will indicate any sort of completely investor-driven bias. But having said that, there could be possibility what the other panelists are saying. In few of the projects, you might see some of the investors are playing a major role. But if you look at a broader term, I do not see just because of traders playing the role, you see the bookings happening. Look at the DLF launch, the Signature Global launch, or Prestige launch in Ghaziabad. It has got significant response from the end users as well. And I doubt, their launches have been questioned by any of the regulators. So one has to be very careful while analyzing these numbers as well as the prices which even if you're comparing with some of the larger market, you will see some amount of investors playing their role, but not that significant what we had seen in Gurgaon market. But over a period of time, and especially when the market is getting stabilized, you will see investors playing that kind of a role really declines.
Okay, okay, great insight. And, I can actually, I was able to visualize and picture, the trend that you were talking about when it was first a combination of end user and investors, and now that's slowly kind of changed. So, what risk do developers run if there's a market correction? Are you safeguarding with phased launches and solid financing? Because this is a trend not just in India, right? We're seeing this trend across the world, but at least I think those are also being accompanied with a fair amount of financing that's provided to homeowners or even investors. Or are we then going to be repeating 2010 patterns?
So most importantly, we should understand that, real estate in India is yet to get an industry recognition, which means that the availability of low-cost finance is still a far cry. And since that is the case, it is important for developers to do their product launches and their sales with a fair amount of caution. Because if your quality of sales is not right, to answer your question, the chances of you not having the money to build it further is very, very high. And understand that a project is not about a certain percentage of buyers. It is about a developer's ability to complete it 100%, irrespective of what numbers have been sold. A. B. How many of them are end users versus investors. So it is very, very important to be careful in the launch phase. Don't go overboard is how I look at it. And that quality of sale will determine how a developer is able to complete a project, A, on time, B, within the quality parameters or exceeding those parameters which have been promised to the buyer at the time of launch. So this is my 2 cents on the whole matter.
Navdeep, we are also told that salaried professionals, even at 20 lakhs per annum, are priced out. And we've actually been covering a lot of those reports. We saw a techie, I think it was a story that came in sometime in January that spoke about his salary and how it was not enough to afford a home in Gurugram, a dream of his. Are most of the deals that you are closing all cash, or are people over leveraging to stay in the game?
See, cash is not the right word. I believe if you're saying it's upfront money,
Yes.
then yes, we do get a lot of people selling their properties in Delhi and then buying properties in Gurgaon upfront. Yes, we do get that as well. But surprisingly, it's somewhat balanced. Some seasonal buyers prefer upfront deal, especially in luxury, ultra luxury. But we are also seeing some young professionals in their 30s working in a tech or a startup, confidentially taking home loans from properties worth 1.25 to 2 CR and above. And honestly, what I believe is, if you have 2 CR, you like a property which is worth 4 CR. So you always go above and beyond what you have. And it's with us, it's with the Indian mentality everywhere. And they're planning long term, and that shows a shift in mindset. Yes.
Okay. Santosh, what is your data then showing on home loan to income ratios in Gurugram? Are we then seeing signs of stress? Because industry estimates are showing that for a 2.5 crore flat in prime Gurugram, the EMI to income ratio crosses 60% for most double income households. But I'd like you to corroborate that.
Yeah, see, if you look at what the data shows is around 70% of the employees who are working in, closer to cyber city or any of the IT developments in or around Gurgaon, their salaries are around 20 lakhs. And if both husband and wife both are working on the IT side of it, they can afford around 2.5 to 3 crores of properties through an EMI. When majority of the home loan, the people who go for the home loan are the salaried class. And it has increased. If you look at many of the developers' books, you will see 60 to 70% of the buyers are going in for the home loans. And this has been corroborated with a lot of data. And there are various schemes which has been offered by the housing finance companies to attract these customers so that they can get the larger benefit when they are buying these households. So bulk of the buyers are salaried classes, and they go for the home loans for the buy.
Okay. In that case, then, Vishal, I think you end your video by saying, careful and watch out if you want to own and buy a home in Gurugram. So if I were to ask you, what would be the advice that you would like to give potential homeowners and home buyers? What would you say? What is something that people need to be careful or watch out for?
So one is, I think now Gurugram market is at that stage which I think Mumbai was in 2012. Uh, Speculation had put home prices out of bound for most people. Uh, there is always, one of the problems in the real estate sector is that people talk too much amongst themselves rather than talk to the consumer.
True.
So you, after a point of time, you tend to delude yourself that there is demand at every price point, and then it doesn't happen, and then you are boxed into a corner. I think Gurgaon is in that stage, or it's close to that stage, in my view. So as a home buyer, I think you have to be very careful as to what you're buying. Should I be stretching myself financially? I always recommend people, don't stretch yourself financially. Don't go with the assumption that home prices will rise every year. It's a myth that everybody in the ecosystem knows, but somehow home buyers outside tend to have this belief, no, ghar agle saal price badega. It's rubbish. To look for properties where you know the developer has adequate funding, that if things go wrong, he can complete the project. And third, be very cautious of projects which have long delivery timelines. One very unusual thing I've seen in Gurgaon is that projects of 35, 40 floors, they have possession periods of 2031, 2032. A similar project in Mumbai will be done by 2028, 2029. Now, some part of it, I agree, in Gurgaon, they have issues like the NGT that ensures that construction ban is there for 3 months of the year. But despite the 30, 35 floor buildings that you construct, you can't take 7 years. So these developers who have long delivery timelines, their customer is not the end user. They are pandering to the trader and investor. So as an end user, don't look for projects where the delivery timeline is too far away.
Excellent advice. Sudeep, if we go by what Vishal is saying, luxury units are priced at 4 to 7 crore and are being marketed as starter homes in some projects. Is that a mismatch, or has the benchmark truly changed?
No, so I would take it a little differently.
Okay.
It isn't a mismatch, but if you look at what the value offering from the developer side is, gone are those days when one could sell a property as luxury without giving that value add that the property ought to have for the money that the buyer pays.
Sure.
So yes, the benchmark has been raised. If you look at we catching up with the world, we are doing some of the finest work in India as far as residences are concerned, and at Whiteland we are doing one of the finest and biggest branded residences project. I speak to you from Bangkok, where I've been attending this forum on branded residences, and I can tell you, that the kind of work that we are doing in India, the quality of work that we're intending to give to the end user or the buyer, is really world class. But I agree with what Vishal says, that it is important to know where your money is going. A, B, it is important to understand the developer's credibility before, kind of you put in your hard-earned money there. But the most important thing, to answer your question, yes, the benchmark has certainly been raised, but there are projects catering to all needs and pocket sizes. So that is what allows Gurugram to grow organically. If you just cater to a certain segment, I think it is not possible for one to continue doing only premium housing and not cater to the middle segment and the lower segment in the society as well. So that's one of the reasons why those affordable housings and the Deen Dayals of the world are also getting sold. So yes, there is product for everyone, but choose your options where you put your money with care and caution.
Absolutely. I think that is the advice that holds well and is consistent across the board. Thank you so much to all my panelists joining me this evening. Vishal, Navdeep, Sudeep and Santosh. Your insight was fantastic, very comprehensive and educative for all of our viewers, including me. The high rises of Gurugram symbolize a new India, ambitious, upwardly mobile and global in aspiration. But real estate booms are much about psychology as economics. So whether this is a structural uptrend or a speculative peak will depend on how grounded developers, brokers and regulators remain in the coming months. Because if this house of cards does tumble, it won't just be investors who feel the cracks, it will be the city itself. For now, keep watching The Big Question. Thanks so much.